The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have a special guest at the break. Bill Meridian of Cycles Research, Vienna, Austria, chatted with me last night. He's got a couple of things he'd like to talk to you about that are going on that might have some significance, especially in the gold market, and of course going on with this thing with Korea. So that seems to be in the news constantly also. So we will have Bill on at the break. Now, as we usually do, we start out the show with the DAX index. As you can see, it hit major support this morning, down over 200 points, sitting right at the 1.618 level. That's a very, very important spot, as we all know, that follow Fibonacci numbers. So we need to keep a very, very close eye on that. But if we go to the little bit longer term day chart here on the DAX, you're going to see something very, very interesting. And you'll notice that we have some symmetry here going back a little over, well, it's about 6 weeks ago. You'll notice on August the July the 8th, we had this big move that came down. Then we had the three drive pattern that is forming right now. So it's right at the 1.618. So you need to pay very close attention to this, because even though there's a lot of news in the air, we could still see a bounce in these markets. And as you see, some of these markets might bounce 2 or 3 days. Now, we talked about yesterday the fact that that's yes, right. Bill was very bullish for if gold went above the 1294, and we were saying that pretty much the same thing, on Friday, because of the quick move we had down, to 1281, which was a $20 retracement. We had 4 of those in the gold, and now we've broken out to the upside, substantially. How high we're going to go remains to be seen, but it's certainly a big breakout. Silver is still lagging a little bit. Silver is, gold's up over $5,000 an ounce since Friday, and silver's only up 3,500. So that's still good, but it's lagging. So you have to be able to see what's going on. Okay, now the one thing that I want to realize is that when we're watching some of these markets, there is a lot of them that do not correlate very well. You have to remember that, because people ask me the question, how does gold correlate to some of these other markets? Well, some it correlates, very, very well with. In fact, we were mentioning last week about the euro and the gold, and I'll put this up. This is an updated one. You'll see the euro has been bullish. Once we cleared 119.20 in that euro the second time, that told you that it certainly wanted to go higher. We're trading at 120.41 right now, so that's also a big breakout to the upside too. A lot of this is news driven, but folks, this stuff was going on before the news came out. So the news follows the trend. That's one thing that I feel very strongly about. Sometimes they're all opinions, of course, but anyway, that's what we're trying to keep in mind, that when we're looking at these things, the market usually follows what the trend is doing, and the news follows the trend, because by the time the news has to be the most bullish at the top, and it has to be the most bearish at the bottom. That's just how fear and greed works. No other way to look at it other than that way. If we take a look at the gold market here, I want to bring this up here to let you see it. You can see once we broke through, hold on one second here. Okay, 1 second here. Just a second. We'll put this up here. What did I do wrong? Just give me a second, folks. I have a little... There we go. You can see here the 3 drive pattern that we had, and then we had the $20 pullback on Friday. That narrow range day like that was highly suggestive of a breakout to the upside, especially with the close that we had on Friday, and that's a big thing. What's really important today, folks, and I really think this is really important, we actually left a gap on the gold market. That never happens. So I don't know how that happened, but evidently somebody really wanted to buy it between 13.15 and 13.18 because there was a gap there. They put a bid in, and it just jumped over all the prices. So there is a gap on gold at 13.50. Now that'll be filled sometime, but when, I don't know. But that's a very important gap, especially if we close really strong today. Up above the 13. It's important that we close above 13.27, I believe, today. 13.25 in the gold today, because that's a 78% retracement of the long-term weekly chart that we've watched here, and we're already trading above that right now. So that's an interesting situation that we have, moving in that direction also. So the gold is broken out, no question about it. Now, I've had several requests to talk about the U.S. dollar index. This is where it was yesterday because of travel plans and stuff. I haven't been able to update some of these charts, but you'll notice here that the dollar index is now trading, I believe it's trading pretty close to 92 today. So it's broken down, really badly. And, who knows where the next level will be. On the euro, you can make a case for 124 to 126 on the euro looking at the longer term charts without any trouble at all, because it's got some really strong numbers that is up in that area. I think I've figured out why the euro is strong is when we got down to that 104 level, we had some weekly cycles that looked like they were bottoming there, and it was a 3-drive pattern. So that's why we're getting this big move. I originally thought that 119 would stop it. It did for about 8 days, and then with all this other stuff that's going on, it's taken it up to the upside. So you can't stand in front of it. So you just want to wait and see, what the next move is going to be. That's one of the reasons why trading foreign exchange is so interesting and fun, is because you have these good moves all the way up and all the way down. You're not going to get all of them, but you're going to get some of them, because the swings are just, they follow the patterns of technical analysis as good as anything you can possibly look at. So that's something that should be very interesting. By the way, folks, we hit that magical number, or very, very close to it. We're going to cover that. We'll cover the bonds when we get back from our break here. I wanted to move on here and talk a little bit about the Canadian dollar, because this Canadian dollar might be getting close to this 115 here in the next 3 or 4 weeks. That's one that we really need to watch, because we could, oh dear, what's happened here? Hold on one second. I'm having a little bit of a technical problem. There we go. Okay, see, the dollar index is below 92. That's trading at 91.80. So, it's still heading down. So there's no reason to stand in front of that freight train. There doesn't appear to mean anything there. I'm trying to do 3 things at once, folks. Let me catch my breath. I need to talk to, we'll have a break here in a second. I want to talk a little bit about this oil market. We had Kyle Cooper on yesterday from Houston Energy, and he was talking about the refineries and stuff, and we want to watch this market very, very closely, because it's telling a different story from what the news is. It's saying that the hurricane's not going to cause as much damage to the oil refineries. To people it is, but not to the oil refineries. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we want to talk just a little bit about this situation we have going in the gasoline futures. This is where we were Sunday night. I want to bring this up to show you what happened. The market had a huge jump in the futures where it went above the highs of March. It was up about 15 cents, so it was not as big as a move as they thought. They thought it would be somewhere between 25 or 30 cents. And since that time, it's had a little bit of a pullback. Just give me 1 second to get the other part of this up, and then we'll be able. I hope. Yeah, here we go. Here's just 1 second here. We'll give me 1 second. I'm trying to do three things at once, so just give me 1 second, and I'll get it up here. Here is the chart for the gasoline up to date through Sunday night. You'll notice that we had a big run up on Sunday night. The market gap from 167 all the way up to 178. That's when it took out the high. 178, it came down 9 cents a gallon to the exact 61% retracement this morning, about an hour or so ago, and you see it's rallied up to the 61% retracement now. Now, what's interesting here, and this is what our good friend Kyle Cooper talked to us about yesterday, there's a big disconnect here between the crude oil, which is the basic underlying product, and what's happening with the gasoline. The gasoline are run through refineries, and at these refineries that are in this Houston, this Gulfport area, some of them are still up and running. There are a few that are shut down, but evidently they are able to run. It's not like it was during Katrina where they were shut down for a long period of time. So that market is not nearly as edgy as some of the others. And crude oil is just flat. It doesn't have any friends at all. We're down $2 a barrel pretty much on the week, I believe. We hit a high last week of 48.50, and we're trading around 46.25, 46.30 this morning. So there is a big disconnect, from that level. So it's important to keep in mind, what is going on here. Now, when Bill Meridian comes on in our break here, there's some really strong points here coming in, and then we have something to look forward to in September that he wanted to discuss with us, which will be very interesting, as it always is. So pay very close attention. We're going to move over to the stock market here for just a bit. Oh, I want to do the bonds first because I think that's the one that we're almost at that spot that we've been talking about in the bonds. Let's get this up here. and we'll take a look at it here. We were saying that there's a strong possibility here that these bonds could get up to this area of 158.27. We got as high as 158.02 so far, so we took out that 157 with ease. But you'll notice on this 4-hour chart, this is going back, well over 5 months, folks. That's a really big ABCD 3-drive to a top pattern with perfect symmetry. So whenever this thing is over, we want to watch these bonds up at this 158.27 level, because it's been a pretty big move, and we think we're going to get up to near that level. I haven't updated the chart yet because of time constraints, but that's what it looks like to me. But I still think longer term interest rates will be going higher, but we're in the midst of what we call, or the market calls, a flight to quality, and that's why they're buying bonds. And to me, that flight to quality is like taking gasoline to try to put out a fire. But we'll have to wait and see how history records this. So that's something that we want to keep in mind. Regarding the stock market, we talked a little bit about the advanced decline line and how it's been going down. I wanted to bring another chart that comes from Bloomberg that shows pretty much the same thing as where we are, because if this market, it was up a little bit yesterday, and Dow was down 1 or 2, but all we need is a really strong down day any particular day, whether this will be it or tomorrow. You're going to be looking at a break of that line, and that's going to be a very, very ominous thing. What this top chart is telling us it's just really the stocks are really, more than half of the stocks are really going down. It's just some of the stocks that are going up. We talked about this over and over again. Of the 30 Dow stocks, there's about 15 of them that are pretty good. The NASDAQ 100, there's about 20 out of the 100 that are pretty good. And in the S&P 500, there's only about 80 of those. So the overall stock market has been rolling over. We see that in the Russell, of course, and that has been the weaker of the market. So this is going to be interesting to see what happens the next day or two if this does turn down. We did have some very bearish patterns, over the weekend, and we'll see what's happening. Yes, correct. We're switching over from the September bonds to the December bonds now. That's always a little bit of a challenge, but we'll be able to do that within a day or two. All the trading, filters out. They're still trading September bonds. It's just that the December bonds will be, the active one, to look at. But those are the ones that we're keeping a very, very close eye on. I wanted to show that same figure on the New York Stock Exchange Index over a longer period of time, because I believe it's that important. This was also done by Bloomberg, and it shows over the last 23 years. This thing has only been activated, I think, in its history, it's only been activated 24 times. In 23 of those 24 times that the market went below that 200-day moving average of the number of new highs to new lows, it means the market's going to drop somewhere between 8% or more. That's basically what we're talking about. 8% now is not much. It's basically 1,000 points in the Dow, but if you're long, it's pretty tough. Now, tomorrow we do have apogee. Thank you very much, Mr. Marshall, and that's always a good thing to look at. That's when the Earth is as far away from the moon as it can possibly be. Perigee is just the other side of that. So we'll have we'll watch that, of course. It does have a pretty good short-term timing release. By the way, the stock market is really, it's not very much afraid. I mean, we have, rockets going out into the Pacific Ocean from North Korea, going over Japan, and, the market was down 120 points last night in the Dow. That was not very much at all. The NASDAQ was down 50, but that's the pork bellies of the futures market. So there's no one actually afraid of any of these things. There's not any fear in the market to see it. Even the volatility index is up just a little bit today. So we'll see if that's going to be the case. So that's the main thing, is to watch this. regarding the reaction to news, folks, I've been doing this stuff for a long time, and when markets don't go up on good news, that's a bad sign, and when they don't go down on bad news, that's a good sign, because that tells you that the market is in the process of changing direction. So keep an eye on what the news is. We got a break coming up here, and then we have Bill Meridian from Cycles Research is going to be our guest, and well, hopefully later this week we're going to have Shane Smolian from the Wolf Trader is going to be our guest. So stay tuned for Bill Meridian of Cycles Research, and he'll have some great information as always. And if you have any questions, it's 877-927-6648. That's the number to call, 877-927-6648. And the final question someone asked about Apple, I'll try to cover that after we get done with our good friend Bill Meridian. But right now, I don't have the Apple chart ready, but we'll have it up. Stay tuned, folks. We'll be back in about a couple of minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we've got Bill Meridian from... Hold on.
Uh-oh.
Uh-oh, let's got air raid warning. You better get under the desk, Bill.
Okay.
I think that's a replay from my 1950s grade school class where we have to be under the desks.
Under the
Anyway, this is Bill Meridian from Cycles Research. Bill, we're looking at this first chart that you're looking at. Is the eclipse chart, I believe, about the September 3rd.
Yeah,
You want to go ahead and start that?
Follow up from my previous appearances on your show.
By the way, you have been spot on. Gold stocks. We appreciate you coming on. So keep up the good work.
Well, once the eclipse occurs, let me just briefly explain that wherever eclipse lands, like this one is 28 Leo 52, so 29 Leo. Wherever it lands, it tends to heat those degrees up about at least 3 months in advance, but as long as 6 months in advance. So that's why we then look at the inner planets as they hit these degrees. You see what happens in the news, and you know that these will become bigger stories in the future. So now the eclipse has occurred on September 3 through 5th. Mars, you see the little red Mars, and I drew the little arced black arrow, will be right on top of the eclipse point. That's known as a trigger. And Mercury will be going stationary right at that degree, I think, on the 5th. And so Mercury, Mars, September 3 to 5, this rhetoric will probably hit a peak around that time. And if the U.S. is...
Uh-oh. Uh-oh, have we lost connection?
Hello?
Oh, yeah, I'm here. I got you. I think we lost connection for just a second. Go ahead.
Oh, I said, well, September 3 to 5th, Mars and Mercury will be right on that eclipse degree, which should then release the energy of the eclipse, which the way things are now, I imagine the rhetoric is at least going to hit a fever pitch if there is not some sort of a retaliation against North Korea or a whack on the nose. So,
and we're closed on the 4th, so this is going to be a real active Tuesday then, isn't it?
I think so.
Oh, okay.
Can I just point, can we go to the next one?
Sure, you betcha. You're the boss. You just tell me. We love having you here. So.
Okay. Well, North Korea is at a disadvantage. This is the national horoscope of North Korea set for September 12, 1948. And you see I circled the Saturn and the Pluto. Well, the lunar eclipse was opposite the Pluto, and the solar eclipse was on the Saturn. And that usually means, in a personal chart, deprivation, lack of funds, revenues are down, costs are too high. So that means at the very best trade sanctions, and it is not positive for their economy. But if we go to the next one, now this won't wear off until sometime in the winter, but then the next eclipse in February is going to be opposite the Saturn. So that will keep it going right through until next summer. But by that time, if we go to the 4th slide.
Is this the one that is the February 2019? Yep, that's it. Hold on one second, and we'll get it up here. There we go.
Now, I'm saying here North Korea long-term is also unfavorable because what you have in the outer wheel is the progressed horoscope of North Korea, and the inner wheel you have the natal horoscope, and you'll see I drew a little square. That the progressed sun is right now about 27 Scorpio, and the Saturn, which was eclipsed, is 29. In February 2019, progressed sun will be 90 degrees to the natal Saturn, which is, given everything else that's happening, extremely unfavorable. They might be hit by a bad crop failure, but this will begin to be effective in May 2018. Now, as I said, in February 2018, there's another eclipse, which reactivates these degrees, and that's followed then by this. And that won't even be at its strongest until we get to February 2019. So you're talking about several years of North Korea's internal economy certainly not getting any better, but much worse. And the one thing I can think of is some sort of a drought or a famine or something like that. So they are definitely acting up at the wrong time because the stars are not on their side. Would you like me to review the markets?
Oh, let me think. Yeah, I think that would be a great idea. Okay. Thanks a lot.
I've got some Austrian recipes here I can give you too.
Oh, good. That'd be good. So we'll start out with the objective of the S&P.
This is just a brief follow-up from the last time. I had set 2480 as an objective because that is equal to the height of the channel that it broke out from, and it's hit there. It's now overbought, and it hasn't been able to get much above that level or sustain itself above that level. And I also, given the cycles turning down, technicals being weak, September's weak, what might be the icebreaker? Well, And that is the next slide, which we saw last time. This occurred on the 3 days ago, on the 26th, that if the sun is conjunct Mercury in the sign of Virgo, that usually breaks the market if it occurs in late August, which it did. So that's already in the past. So number one.
Didn't that happen in '87 too, Bill?
I believe it did. I don't remember.
Yes, yeah, it was. August 25th was high. Yeah, go ahead.
We're 30-year anniversary date from the top in 1987. And if we go to the next slide, you'll notice oil has been rallying up to those two resistance lines and falling away. And yesterday it broke below its prior low. Now, I have been bearish on oil and it's refused to break. And if we go one more slide down, that's oil price behavior by month. And you'll note that August has traditionally been the third strongest month of the year. But look at the months that follow. September, October, November, the two most bearish. And how can we get then a key as to what would tell us whether it's going to close August on the downside or not? And this one, we did it last time, we'll do it again. I found the period from the 1st through the 11th is fairly key in the month of August, that if oil declines from the 1st through the 11th, the odds are pretty good 4 weeks later, 6 times up, 10 times down. But if it closed up in that time period, it's 4 weeks later, 12 times up and 4 times down. So there's quite a swing between these two. So this is an indication that oil would be down by the end of the month of August, and here we are on the 29th. So the point I'm getting to is on the next slide. This is one of the most bearish indications I found for oil. If it closes below its opening level in the month of August, it has been very bearish in the past. And if you just refer back to that histogram, you will note that the two most bearish months out in front of it are October and November. And if it closes on the downside in August, that means the correction is beginning about a bit early. About 75% of the time, oil does not bottom until December or January. That's a distribution analysis of where the next tradable low is. About 10 to 15% of the time, oil does not even bottom until late in the following year. But rarely does it ever bottom before December. So I'd say with the technical action here, and given all of the cycles, it is not going to break through that overhead resistance. So what I have done is the next step, bought the SCO exchange traded fund, which is twice inverse the energy index. And of course, I haven't even looked at the energy stocks, but they just keep hitting new relative lows day after day after day. And if they were going to bottom, they would be flattening out in relative strength. And I haven't even done that yet.
Hey, let's take a break and we'll be right back with you, Bill. Can you do that?
Sure.
We'll be back, folks. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Bill Meridian of Cycles Research, Vienna, Austria. Bill, I have a question from one of our listeners, and the fact is that we had Kyle Cooper on from Houston Energy yesterday, and we were discussing about how poorly crude oil is acting in the face of this really bullish news, and even gasoline futures are only up about 8 cents. Do you factor that into when you're looking at a trade scenario?
I have noted that, yes, but all the quantitative studies I've ever seen about news and effects on the market are not, there's not a high correlation. The only thing I ever got out of those was that if you get really bad news in a declining market, it takes a C wave in Elliott terms, and if instead of it being 1.618 times the A wave, it could be 2.3 or 3 or something. In other words, bearish news extends declines. That's the one thing that's come out of all the stuff that I've ever read.
Okay. Do you want to move on to the gold market now?
Yeah, well, this is just, again, a recap. And this, I edited this a little bit from last time. And I said, of course, it did break through 1294, 1298. The monthly cycle bottoms, as does the annual cycle. That was in August. It's risen in August 59% of the time, with the third highest magnitude of all 12 months. If the longer cycle is rising in a strong month, we can generally add 10%. So the 59% figure actually jumps to 65. So now it's broken out, and we'll see the graph on the next page. And so let's go to the next page, and let's keep in mind that September has traditionally been the strongest month of the year for gold. And so that's right out in front of us, and this just broke out. And if you just add the height of that triangle, it counts up to 1380.
Okay.
And
well, we're at 1330 now. That's just 2 days trading or 1 day trading.
I know. It's getting there awfully fast.
Yes.
And, of course, the next cyclical downturn, historically, the second half of October is usually very weak for gold. So things look good for gold, bearish for equities, and bearish for oil. And to tell you the truth, I was reading some of the fundamentals of fracking, and they apparently ran the oil price down thinking either they were going after Iran or the frackers or both. And so the fracking fraternity has greatly improved their technology. They've innovated very, very quickly. And they're getting more fracked oil up out of the ground than they were before in reaction to the efforts to drive them out of business. So I think that's sort of a fundamental. It's hit critical mass that you really can't hold back. And if you look at technical charts, Larry, I mean, I could see an objective here like in the mid-20s. And
sure. Yeah.
Yeah, and so and as I said, if the month of August closes on the downside, it's been a strong sell signal in the past. The key to that is the first 11 days to August, which did close down, and now the month is closing down. So I really can't see it going any higher. I can only see it going lower.
Well, it's certainly heading down. That's no question about it. I've always felt if markets can't respond to bullish news, there's nothing that's going to hold them up. That's pretty much the way it looks, and it's in a downtrend anyway. Bill, we have a question from one of our listeners about the chart for Mr. Trump. You said he was going to have a rough August. That's been the understatement of the year. Does it ever clear up for him, or is he pretty much into Oh, it does. Really? There's light at the end of that tunnel? Go ahead, my friend.
Gets through, it's like I advise anybody. I mean, there's sometimes you just can't escape. I mean, I've had a rough August. I've had 2 oral surgeries. I got sick for the first time in 12 years. And my accountant made a bunch of mistakes, and I had to write a bunch of checks to the tax authorities when I was in the States. So you just, you just go through it. And Saturn is stationary right on Melania Trump's progressed sun and opposite his sun. I didn't even mention that. I mean, that alone is tough enough. But with his Mars, you have to boil it down to the most important factors. The eclipse was on his progressed sun. It was on his natal Mars. So he's very aggressive, but he's got Saturn stationary opposite his Mars. It's sort of like a car running with the emergency brake on. I mean, there's a lot of things he wants to do, and he's being frustrated. And Saturn will, from this point forward, move out of there and will not return. That's number one. And number two, the next eclipse in February will be opposite this point. So very frequently, events that occur now will flare up again in the month of February. Okay. And so we've got to look out to February as being the next key point. And that will not be, it will be in some respects, because the eclipse is opposite his Mars, it will be a little more difficult. In other words, he won't be dealing the energy out. He'll be more on the receiving end of it. But I think he gets through that okay too. So as we get into by the end of September, I think things calm down quite a bit.
Okay. All right, that was the question that someone had, and there's another question that someone's asking is about the fact that you did so well in all of these services like investment time, the timer digest and everything, and the question is, how long have you been doing this? And I've known you 35 years, so how long have you been doing this, Bill?
Well, I bought my first stock in 1966 when I was 17, and I entered the profession in 72. And Cycles Research ran from 88 and 89 when I was laid off from Payne Webber, but then the Arabs offered me a job, so I stopped writing it and started writing it again in 2000. Was it the year 2000? I think it was. Yeah, it had to be, because I came out bearish. I was, I think, the first person to ever be rated number one on my very first rating in Timer Digest, because I had gone bearish for the entire year before, from 2000 on. And so the minute that they watch you for 12 months before they'll even rate you. So I had been bearish. I hadn't been bullish at all for 12 months. So how could anybody be ahead of me?
Yeah, that's interesting. Hey, on a sad note, Carolyn Crawford passed away. We chatted a little bit about that, and we want everybody, to send out some white light. She was a very nice lady, and we all knew her, and it was a rather surprise. I don't know if you know this, Bill, but she was hit by a drunk driver in a big rainstorm that we'd had here about 3 weeks ago.
I did not know that.
Yeah, and so it was, and she was really in bad shape. It was probably easier for her to pass on than what she would have to go through. But that's the way it is. Listen,
Larry, she was the maid of honor at my wedding, so my wife was quite upset.
Yes, I remember that, sir. That's very, very nice. Listen, Bill, how would the folks reach you if they wanted to get in touch with you?
Well, it's Bill, Bill, at cyclesresearch.com. Cycles with an S, not without the S. So Bill at cyclesresearch.com. And if you like, I'm writing my September report, which will add more about gold, bonds, and stocks, a little more specific, so you got the general gist of it. So if you just put LP show in the, or just LP show in the box at the top, what do you call it? The subject box. I know that stands for Larry Provolone, and I'll send the September report to you. So if you'd like a free copy of the next report, it'll go out before Thursday. So just send me an email.
Oh, well, they'll certainly want to do that, and we'll have you on in September for sure. And we'll,
Okay.
keep a very close eye. Listen, I want you to take it easy and don't travel too much if you're getting sick, because we're not kids anymore, buddy.
No, that was just I just ran myself down getting to the States, and then I took some other flights, and I just didn't get enough rest. So, and I'm fine now.
Well, listen, I want to thank you for being on our show today, and we'll have you on again soon. And
Okay.
just stay well, my friend, and tell your lovely wife I said hello.
I'll do that, Larry. Thank you. Bye-bye.
Okay, you bet. See you later. Bill Meridian of Cycles Research. We'll be back to wind up the show in just a few moments.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks. The 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, it's very simple to reach Bill. It's Bill Meridian at cyclesresearch.com. I think if you hit that, you're going to be able to. Fact is, let me post in here the best way for him to be reached. I think we can just put this here. Here it is. I can just get this up here, and you'll be able to see it. It's Bill at cyclesresearch.com, and then you'll be able to reach him. And then, of course, he has Twitter if you want to reach him. But he's a super nice guy, as you can hear on the phone, and I've known him almost forever. anyway, let's get back to the market here. I posted a chart here of the New York Stock Exchange Index. This is one of the reasons for my bearish. This is a simple part of technical analysis. There's no astrology here. There's just simple channel lines, as you can see. It's been following a downtrend channel. We stopped exactly at the 50% retracement on Friday, 78% retracement of the high. We've now broken out below those lows, and so it is heading to the downside. The ABCD structure on this says we're going to have a pretty substantial move, at least as big as what we had between the 8th of August and the 18th of August, and potentially a lot more. So that's what I try to do with pattern recognition. This has nothing to do with any cycles or anything like that. When we take a look at the Bradley model, this is as of Friday, and it really hasn't moved very much. It'll move a little bit today, at least the prices will, but you'll notice that it's also heading down into this October area. Keep in mind that there's a gap in the Dow Jones that we're looking at. That's at 20,270. That's the minimum objective that we're looking for here. We'll have to wait and see. Now, I do not know what will trigger this, if it will happen or not, because remember, all of your frustrations in this business or in life come from unfulfilled expectations. If you think something's going to happen and it doesn't, you get frustrated. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.